Have you ever thought why banks are so obsessed with wanting you to deposit your money with them? They've even gone to the point where many of the big banks are penalizing you if you can't keep a minimum balance with them. Why do they want your money? Don't they have enough money? There are two main types of accounts you can open: a checking account and a savings account. Most checking accounts don't pay you interest, but they do penalize you if your balance with them is too low. A savings account does pay you interest as a way of enticing you to keep your money with them. As long as you don't withdraw from your savings account, you'll earn that interest every year. Unfortunately, interest rates in a savings account is a joke. Most banks will give you 0.01% per year if you leave your money with them. Some will give you more, but none will give you anything near what inflation is. So why do banks want your money? Every commercial bank makes the bulk of their money by giving out loans to people and businesses. Need a mortgage for a house? Need to finance a car? What about a loan to fund your business? How about a loan to pay for a wedding or a vacation? All these loans get their funding from the banks. And banks are no different than any type of business trying to grow. They need money to lend out. That's where your deposit comes in every time you put money in an account with the bank. Banks get billions a year in deposit and then lend them out to people who need money. They all charge interest on these loans. Right now it's about 6 or 7%, but the rate can change based on several different factors. But don't worry, your money is safe just in case that borrowed money doesn't return. In the US, there's the FDIC, which insures bank deposits for up to $250,000. So if the bank goes bankrupt or there's a massive bank run, your money is insured for up to $250,000 just in case that happens. So your money is safe in a bank. That's good for you and that's good for the banks. Say a bank charges 7% on a loan and your money in one of their savings accounts making 0.01%. That means if you have $100,000 in a savings account, you earn $10 a year. That bank is borrowing your $100,000 and lending it out at 7%, making $7,000 on that money. The banks make $7,000 and give you back $10. They then pocket the rest as profit. Of course, with fractional reserve banking, many banks can't borrow all your $100,000, but they'll borrow enough to make a profit. Banks have even resorted to giving out other perks aside from interest payments if you keep your money with them. Many will offer you $200 or $300 if you open and fund an account with them. Some will offer you travel and gas perks for opening an account with them. Bank interest rates can even be negotiated if they really want your money just sitting in their bank. As long as these perks and bonus offers account for less than what the bank will make on a loan, they're coming out on top. For instance, Chase and Wells Fargo are offering people $200 if they open and fund a checking account with them with at least $1,500. That comes out to $200 expenses for the bank. But if they can borrow $1,500 and lend it out 7%, for example, they'll make $105. But they also charge about $12 per month service charge if your account dips below $1,500. That's an extra $144 per year they pocket if you have less. And of course, these banks know that many folks who open an account with them will deposit a lot more than $1,500. The median balance in a checking account is $9,132. So if a bank has access to your $9,000 and lend it out 7%, they make $639 on your money. Banks are not in the business of losing money. They want your money and then immediately try to lend it out to people so they can recoup and profit from the difference. That's why banks are just dying to get you to deposit your money with them. So what are your thoughts? What bank do you have your money in? Comment below. And as always, take care of your money.